Hi believers, this is Amit from our team, and I'm here to provide a weekly bite and the road ahead in the markets. Ahead of the festive season, Indian markets ended their third consecutive week in positive territory, supported by a strong start to the earnings season and improving investor sentiment. The Nifty 50 climbed 0.5% to cross the 25,700 mark and settled at 25,709, the highest level since October 2024. Bank Nifty 2 outperformed Nifty and closed the week with 2% gain. Broader markets also participated in the rally, with the mid-cap index rising 0.3% and the small-cap index closing the week flat. All indices are bouncing off from their immediate support, along with an improving market breadth, which is a great indicator suggesting that the markets are preparing for much higher levels. So, what's powering the market's festive mood ahead of Diwali? A strong start to the earnings season, led by Axis Bank, which beat margin estimates and reported improved asset quality along with robust Nestle's India's performance in the September quarter, sparked a rally across private sector banks and consumer durables, giving a much needed boost to the bulls. Inline earnings from banks and signs of easing asset quality stress have bolstered overall industry optimism. The Q2 FY26 earnings season has kicked off a strong note with 291 companies declaring result as of 18th October 2025. All metrics, sales, operating profit, profit after tax, and EPS growth are trending higher. Since less than 10% of the listed companies have reported so far, these trends remain preliminary and are likely to evolve as more results come in. The market also drew strength from a shift in foreign investor sentiment as FPIs turned net buyers in the recent sessions. Easing valuation and good earnings in large cap banks and FMCGs encouraging them to unwind their bearish stance. In addition, the rising hope of a trade deal between India and US, along with a drop in crude oil prices, have further helped Indian equities to outperform key global peers so far this month. Besides this, the rally was also supported by growing expectation of another rate cut by the US Federal Reserve and easing geopolitical tensions in the Middle East. Technically speaking, main indices are bouncing off from their immediate support along with an improved market breadth which now stands in mid 50s. The weekly price action formed a sizable bull candle, forming higher high low despite volatile global cues, indicating inherent strength. The series of higher high, higher low formation helped index to log a resolute breakout from 1 year falling trend line, indicating conclusion of corrective bias that has opened the door of the next leg up towards all-time high of 26,300 for the coming months. Hence, any decline from here on should be capitalized to accumulate quality stocks with strong earnings as strong supporters placed at 25,200. So could Nifty 50 hit a new record high soon? With today's rally, the Nifty 50 has moved closer to its all-time high of 26,277, which reached in September 2024 and is now just about 2.16% away from reaching this level. We believe the street remains optimistic about an earning recovery in the second half of FY26, likely to be driven by the recent announced GST rate cuts along with RBI's cumulative 100 basis point repo rate reduction and other easing measures that are expected to revive consumption. Only caution is that the process can be slow and time consuming, and too much noise around geopolitical issue can lead Nifty to consolidate further. Globally, amidst the ongoing trade tension, Trump said his proposed 100% tariff on Chinese goods would not be sustainable and he would like meet Xi Jinping in South Korea. Let's now talk about the outlook ahead. We believe the coming year may be the turning point for Indian equities. Over the past year, markets have absorbed multiple shocks from FI withdrawals to global conflicts and muted earnings. Yet, domestic liquidity and investors' confidence have kept the floor intact. A steady fall in inflation, fiscal discipline, and a record low corporate leverage provides a strong base for potential earning led rally. The rate cut cycle is expected to gain momentum globally, with the US Fed, RBI, and the ECB likely to deliver additional easing through FY26. Consumption recovery is set to strengthen with GST 2.0 simplification, income tax relief, and festive demand, especially in sectors like auto consumer durables. Discretionary segments like travels, hotels, and retail continue to show strength, while staples benefit from improving rural sentiment. Valuation also remained reasonable. Now we are trading at 20x 1 year forward Nifty earnings in line with long term averages. Considering all these, we expect healthy equity returns going forward. We shall be releasing Muhurat pick on 21st of October, an hour prior to market open. Please do not miss this. That's all for today. Wishing a very profitable Samvat 2082 and happy Diwali to you and your loved ones. Thank you.